Greatest investor of our time, but you'll find him in Omaha, Nebraska. He has billions of dollars, but his lifestyle is Midwest simplicity, and all that money is going to charity. He's been wildly successful, but says there's nothing to it.
Lessons from young Buffett. The power of compound thinking. Warren Buffett didn't become a billionaire overnight. He became rich because he started thinking differently at just 10 years old. While most kids dreamed about toys, Buffett was already obsessed with numbers, business, and the idea of compound growth. This is the story of how a boy from Nebraska discovered the secret that would make him one of the richest men in history. The first spark. A 10-year-old investor in 1940, young Warren visited the New York Stock Exchange for the first time. He was fascinated, not by the chaos, but by the power behind the numbers. That year, he bought his first stock, City Service Preferred, for $38 per share. When the stock dropped to $27, he panicked and sold at $40 for a tiny profit. A few weeks later, the price jumped to $200. That's when Buffett realized patience is profit. The math that changed everything. Buffett discovered a simple idea that became his lifelong philosophy: compounding. He once said, "My wealth has come from a combination of living in America, some lucky genes, and compound interest." A dollar invested at 10% annual growth doubles roughly every 7 years. At 20%, it doubles every 3.5 years. Buffett didn't just want to earn. He wanted his money to work forever. The pinball machine empire. At 14, Buffett used $25 to buy a used pinball machine and placed it in a barber shop. In a few months, he had several machines, and he sold the business for $1,200. He didn't waste the money. He reinvested it. That's compounding in real life.
You have been talking this philosophy for years. It's no secret.
It's no secret.
Why doesn't everybody do it?
Well, it requires patience, which a lot of people don't have. And people would much rather be promised that they're going to win a lottery ticket next week than that they're going to get rich slowly. Gus Levy used to say that he was long-term greedy, not short-term greedy. And if you're short-term greedy, you probably won't get a very good long-term result.
Not just numbers on paper, small gains, reinvested consistently, build unstoppable momentum. The compound mindset. Buffett learned early that money isn't just about making more. It's about keeping it growing. He didn't ask, "How much can I make this week?" He asked, "How much will this be worth in 20 years?" $1,000 invested at 10% for 50 years equals $117,000. But $1,000 at 20% for 50 years equals $91 million. That's the power of compound thinking and time. He once said, "The most powerful force in the universe is compound interest." Lesson for viewers. The truth is, anyone can use the same principle. Start early, be patient, reinvest every gain. Buffett's genius wasn't about predicting markets. It was about consistency and discipline.
Buffett took full advantage of that undervaluation. In 1973, he bought 1.7 million shares of the Washington Post Company. As a boy, he delivered the Washington Post. Now he owns 13% of it. That investment cost Berkshire Hathaway $9.7 million. Today, it's worth $370 million, and Buffett says he'll never sell his shares. Another of his permanent holdings is in Capital Cities. In 1985, Buffett bought 3 million shares of Capital Cities when it took over ABC. That investment cost $517 million, and it's now worth $927 million.
Even if you don't have millions to invest, you have time. And that's your greatest asset. The earlier you start, the more your growth compounds. Not just your money, but your knowledge, skills, and habits. Conclusion. Warren Buffett didn't just master finance, he mastered patience. He proved that you don't need to be a genius to become wealthy. You just need to start early and never stop compounding. Start small. Think long-term. Your freedom starts today. Subscribe to Titanium, where financial literacy meets real freedom.